Good morning, MJ traders and investors. It's Rod with Pow Group. Welcome back on the Pursuit of Wealth for a Canopy Growth earnings video update. So today is Tuesday, February 9th. And in today's video, we're going to discuss Canopy's earnings and we'll look at the chart and what to expect for the day ahead in both Canopy and in the sector. So before we jump into today's video, make sure to smash the like and subscribe to the channel. So Canopy Growth Q3 revenue increases 23% to 153 million. And I mentioned yesterday in a video, I did a video on prepping for these earnings and whether or not we should hold through them. I mentioned that I expected them to potentially beat on one or the other, either EPS or revenue. I guessed that they were going to miss on their revenue and come in line with their EPS, but it turns out they beat revenue and they had a huge miss on EPS. So we'll go through these together. This is my first time going through it really as well in detail. So Canopy Growth reports third quarter fiscal 2021 financial results. Business transformation continues to gain traction. Improved commercial and operational execution drives record revenue of 153 million Canadian, up 23% versus Q3 2020. Q3 2021 Canadian recreational market increased by 30 BPS versus Q2 2021 based on proprietary market share tracker. Provides medium-term financial targets, including expectations to achieve profitability during the second half of fiscal year 2022, while continuing to invest behind consumer insights and R&D in the US market. So we're still a little ways out before they reach profitability in their eyes. So with renewed sense of optimism, Canopy further advanced to US strategy ahead of potential cannabis reform. So all information is in this press release is reported in millions of Canadian dollars unless otherwise indicated. So the third quarter fiscal 2021 financial summary. Let's just see, we delivered another quarter record revenue with growth across all our business, led by improved commercial and supply chain execution. That came from David Klein, the CEO. We were building a track record of winning in our core markets while also accelerating our US growth strategy and building momentum. So medium-term financial milestones. Let's just go through these, see if there's anything that we want to mention. Positive adjusted EBIT during the second half of fiscal year 2022, sorry. Positive operating cash flow for the full year, fiscal year 2023, and positive free cash flow for the full year, fiscal 2024. So they gave a little bit of guidance there. Key drivers underpinning the company's financial targets include legal recreational cannabis market grows from 40% in fiscal year 2022 to 25% to 30% from fiscal year 2022 to 2024. So recreational cannabis sales growth expected to drive overall market growth and market share gains. Just skip on through this. Company's international medical cannabis growth expected to be driven by the growth of Germany medical market. So most of their international footprint is going to be focused on Germany, it looks like. And growth of the company's US CBD business and consumer packaged good business, mainly BioSteel, This Works, and Stores and Bickle. So Stores and Bickle they purchased about a couple years ago now. And that is a vape company. So they make the Volcano. So another revenue stream for them. And that's expected to be driven by distribution expansion in the US and new product launches. So the company's cost savings program of 150 to 200 million expected to be realized over the next 12 to 18 months. And the company's CapEx expected to be below 200 million per year in fiscal year 2021 and 2022. So highlights revenues, we achieved 153 million, an increase of 23% versus Q3 2020. Net cannabis revenue of 99 million was driven by the increase in Canadian recreational and international medical cannabis revenue. So increase in sales of S&B, so Stores and Bickle vaporizers, This Works health and wellness products, and BioSteel contributed to overall net revenue growth. So gross margin was 16%. And just moving on, I'll go through these a little quicker here. Operating expenses. Expenses declined by 15% versus Q3 2020, driven by year-over-year reductions in sales and marketing. So that's good to see. Sales and marketing decline of 15% reflects lower advertising and marketing expenses versus last year's spending attributable product marketing and brand awareness campaigns in support of 2.0 products. So they sort of took their foot off the gas pedal on the advertising budget. So we'll move on through that. Net loss of 829 million, a 720 million water loss versus Q3 2020 was driven primarily by impairment and restructuring charges. So this is again what I mentioned in my video yesterday, that we were seeing stockpiles, record stockpiles of cannabis and in Canada, and likely going to drive impairments and write-downs, and that's exactly what we saw here. So it was driven primarily by impairment and restructuring charges and other related charges of $416 million, of which $382 million relates to our announcement on December 9, 2020. And the total impairment and restructuring charges recorded during Q3 2021, approximately 15% was a cash charge. Other expense totaled $291 million during Q3 2021, stemming from non-cash fair value changes, mostly driven from the company's higher stock price. So adjusted EBITDA loss was $68 million compared to $97 million in Q3 a year ago. Cash position, cash and short-term investments amounted to $1.59 billion at December 31st, 2020, representing a decrease of $0.39 billion from $1.98 billion on March 31st, 2020, reflecting the EBITDA loss and capital investments. So you can go through these other highlights here, and if you want to see the exact data for the financials, I'm going to skip through this here in effort of time though. This video is already getting to be a little bit longer, and we'll take a look at the EPS and the estimates that we were expecting. So we were expecting 149.27 million. So we came in at 153 million. So slight beat, not a massive beat there, only by about 4 million. And EPS was expected at minus 0.32. And I have it here on Seeking Alpha coming in at minus $2.43. Not comparable to consensus of negative 0.33. So that is a huge, huge EPS miss. And they beat on revenue, but the stock is up here pre-market. So it doesn't seem like most people care about the EPS miss right now. And it's likely due to the blurb that they put in there about Canopy reaching profitability in 2022. In the first half of that year. So we'll see. That's something David Klein and Canopy have been saying for a while now, is they didn't expect to reach profitability until sometime in 2021 or 2022. So that looks like that timeline is right on cue. So we're at 44.69 here pre-market. The resistance to break is going to be 45.40. And if we break 45.40, that essentially confirms a daily bull flag. You could say this was a daily bull flag back here as well, but there wasn't a very big pivot. So that wouldn't really be considered as a strong support in my opinion. So if we do see a sell of the news once regular trading hours are upon us, then we'll look to that as a potential level. The support there is 38.92. We also have EMA 12, which is sitting at 40.34. So 40 psychological should provide nice support as well. But so far, not reacting here pre-market. We need to see how things react after the market open. And I'm potentially keeping an eye out for a temporary top. Again, I mentioned this in my video yesterday, that we haven't really seen any meaningful daily consolidation. And on the weekly chart, we haven't seen any weekly consolidation now in about over a month. So we have EMA 12 down here on the on the weekly chart, sitting at 33.35. So once we start to consolidate, we have a weekly inside bar. So if we break 45.40, we'll see weekly continuation. And if we lose support at 38.92, that is going to be key. Then that will signify that weekly consolidation is underway. And then we'll be scouting a weekly higher or low compared to 24.05. So just keep in mind that if you are in a position, we are getting overextended and we've run over 200%, and we could drop about 40 to 45% and still be in a weekly uptrend, just looking for a weekly higher or low. So Canopy on the weekly chart, we've got the 10-week moving average down at 32.72. So that could be another potential support zone. And if we take a look at the moving averages on the weekly, you can see that we have the 100 and the 200 down at $25. So I expect $25 to be very, very strong support if we were to make it down there on any weekly consolidation. And on the daily, the 50-day moving average is down at 31. So we've got lots of support around the $25 to $30 range. We've got a little bit of support here around $40 psychological and $38.92. And the most recent daily higher low sitting at $42.26. So most important, the first level that we're going to be watching, $42.26, then $38, then $40 psychological, $38.92, and then there's nothing really after that until down here. We've got a little support level at $32.47. We got the 50-day moving average. So we've got the 10-week moving average at $32.72. So just keep your eyes peeled for a potential sell the news event, because I'm not convinced that the bulls are going to be able to hold these gains. I'm not that impressed with the financials. Obviously 153 million. There's still, it's still pretty laughable when you look at what the MSOs are doing in the United States, and Curaleaf and GTII with record revenue and not even federally permissible yet at the federal level. So it's going to be interesting. So we have the 20-week moving average down here at 36 on the daily as well on Canopy. So we did have a cross of the 20 and the 50 moving averages. To me, it just looks like this rally is ready to cool down. And personally, I'm not holding any CGC going into today. I'm holding a little bit of MJ. I trimmed a lot of my positions yesterday, but just keep in mind that it's really going to depend on how SPY opens as well. If we see any weakness in SPY, then any momentum that CGC bulls were getting will likely dissipate. But let's just take a look at SPY here. Pre-market, we are at 390, so we're opening about 50 cents lower. So not a huge difference from yesterday. So not a massive gap down or anything like that. So we're going to be watching SPY as a potential clue as to when other names may start their consolidation. And if you look at SPY, we have a higher low every candle for the last 7 days. And when this tops out, I mean, we pulled back, we were in a daily downtrend, and then just straight V-shaped to all-time highs without any support here on the daily. So the key levels are going to be the low of yesterday. So 388.35. If we lose that today, then daily consolidation is underway. And then we can potentially look for a daily higher low, scouting one compared to 368.27, which again is a long way down. I'm just looking to protect gains and protect and avoid these massive drops. SPY could still drop 5% and just be looking for a daily higher low and a trend change attempt. And this is all coming off a daily downtrend. So all eyes are going to be on SPY and the market, and CGC this morning will look for other Canadian names to potentially follow CGC. So we'll look at Aurora. Aurora's up over 5% here pre-market. Afria just flying up over 13%, almost 14%. SNDL up 9% pre-market. Tilray up almost 20% to $35. Wow. Hexo seeing a huge gap up as well, 914. So it seems like other peers are celebrating that maybe their earnings weren't that bad, and we're starting to see the peers in the sector sort of catch up as laggards. And we've got Hexo earnings coming out in a couple of months, the end of next month in March, I believe. So that one will be very, very interesting. They've alluded to the fact that they're probably not going to be doing any more write-downs or dilution. So we'll see if their sales pick up drastically, and if they pick up and they profit a crazy amount, then that would give them the capital needed to go and deploy that into the US market and start expanding that strategy. So I think at this point, we have earnings coming out from Aurora on Thursday. So I think that will obviously have an impact on the market. If it's really bad, then obviously most of the names will probably get hurt as a result. But it's not going to be nearly as important as the CGC earnings, in my opinion. So I'm pretty much going to leave it there. We'll be watching SPY and correlations from SPY and CGC. All eyes on CGC this morning as we watch for potential clues and market temporary sector tops. And we'll see you a little bit later on today. Keep in mind, Aurora earnings on Thursday. Other than that, that's pretty much all I have for you guys. Let me know in the comments below if there's any other questions that you guys have. If you're swinging CGC, I'd love to hear from you. And we'll see you a little bit later on today for a daily market recap. Thanks again for joining us on the Pursuit of Wealth. Make sure to hit the like and subscribe.